Let me already we have some single candlestick patterns, and yes, today let's dive a little bit more into these. Have a little bit. Okay. So let's dive a little bit more into these candlestick patterns and give you guys a little bit of where to use it, and let's show you guys a little bit of where to use it and when they are more important. Remember, like I told you guys, all this individual stuff, they are not going to identify a trade for you, but with a lot of different confluences together, a lot of different things put together, they start making a lot of sense to you. So we already talked about a few of them, single candlestick patterns. We already talked about a hammer, inverted hammer, hanging man, shooting star. Mind you, this is coming from a crypto chart, so I'll just definitely give you some stuff. Maybe it might not technically look the way it sounds, the way it is looking right here, but just get the idea of it because you might see this somewhere looking different. And you might see this somewhere looking different. You might see this somewhere looking different. You just need to know some of the characteristic of it, and so you can move forward. So let's start with a bullish engulf. Let's start with the bullish uh, pattern. Let's start with bullish candlestick patterns. Again, like I said, we will do some more in a whiteboard because this was like a limited screenshot I saw somewhere. And okay, so this is a bullish engulfing candle. So you can see it's a two candlestick pattern. It's a two candlestick chart pattern where uh, where it's usually found at the bottom of a downtrend, usually found at the bottom of a downtrend, and it signify a potential reversal. So in this two candlestick pattern, there is always a red candlestick followed by a big, there's always a red candlestick followed by a big green candlestick that fully engulf it. So let's put it this way. A bullish engulfing candlestick pattern is the one that signify a potential reversal towards that signifies a potential reversal from a downtrend to an uptrend. So this candlestick pattern usually happen towards the downtrend, at the bottom of a downtrend, where you see a red candle, this red candle coming from the previous
Oh,
down.
okay.
Somebody talking? So this red candlestick usually happen because of the previous downtrend. You know, downtrend meaning that prices has been selling, has been dropping, and this one being the last of those red candlesticks, which most of the time you'll see me, I'll call it and another block as well. But most of the time this usually come from a downtrend, and you have your last red candle before the big green candle. So there are some few things to take into consideration because this usually can happen in a period of a consolidation as well. You can find candlesticks like this in an uptrend or in the top of a trend, but it's not a bullish engulfing because for it to be a
Una
bullish
favore na
engulfing,
kugabaza sima.
please, mute yourself, guys. I'm sharing the screen. Clovis, can you like uh, take some of those people to mute themselves? So
Zoom
this
user,
usually
Zoom user,
happen.
please mute. Zoom user.
This,
This person called Zoom user.
yeah, I don't know if you can use the chat section to text them or tag them to mute themselves or whoever is talking. So
Yes,
again,
I
like
can.
I was saying. there are a few characteristics to consider when using when identifying the bullish engulfing candle. You will have to make sure that you're looking for this towards the bottom of a downtrend. And yes, and another thing to take into consideration, it will be more stronger if this candle started a little bit lower than the bottom of this. That means there was a gap. That means the candle has a jump that started a little bit lower than this, or the candle came in lower than the low of the previous candle, the previous bearish candle. It came to the low of it before fully engulfing it. And this green candle must close above the high of the red candle for you to identify that that is a bullish engulfing candle. First, you have to make sure that it's at the end of a downtrend or during the consolidation in a downtrend after a downtrend, because it signifies a potential reversal of a trend. Doesn't matter the time frame that you're using, just make sure that it's in a downtrend and you're trying to get a potential reversal to the upside. And again, I told you guys, you don't really need to trade single of these, but when putting in place with other stuff, they make your trade more solidify. If you want to trade these, you will have to wait until you get after you this is a confirmation. With other stuff, you can trade this, enter right here or within the next candle. If you get is a cool pullback, you enter right there, but stop below there. And yeah, stop below there because that make it invalid as well. That's why I said it's found at the bottom of a downtrend. So if something like this occur at the bottom of a downtrend, and then you start having closure below that, and then that trend is not over. So yes, you enter your trade here, following trade here, following some other stuff and other key indicators, or when you measuring your risk reward ratio, you probably get your target from that. But yes, the invalidation is below there. But make sure you trade this at a lower point of a downtrend, given some other factors. Let's get to our next one. Before you guys start popping your questions, let's run a few of these. Again, like I said, when you see this, when we head to the chart, we actually identify some of it. You see that some of these are not really like this, but you know, just get the idea of it. But we have a tweezer bottoms, which it's not necessary just a two candlestick, not necessarily just a two candlesticks, but it's important to know that it's a two candlestick pattern, which forms again at the bottom of a downtrend, because these are reversal. This signify that there's potential reversal happening in the market, because this happened towards the bottom of a downtrend, meaning the price has been dropping for some time. So during this period, it happens when you have price that has been selling from up here, and you have your last red candle, which come to a, you know, we told you guys about support to a potential support, and it reject from there, it bounces, uh, and it bounces. Sometimes you actually see that it has a closure, like a tick closure down here. But the thing to consider is this one also has a similar, this one also has a similar bottom, the same or similar or just slightly different. You can barely see the difference, that the bottom are the same. So yes, it must has the previous candle must be red, and the next candle is also green, meaning that the reason why this candle is green, signal, this that strong signal that's telling you that there's a potential reversal here, because remember this candle was selling all the way from up here, and then you have it bounce down here, right? Close here, open a new candle here. This is where this candle open. And then look at how long this tail was. The shadow was also the same. The shadow was the same as this one, but it bounces towards the same or at the same range of price. Bounces at the same range of price. And they end up closing up here. So it opens here, make this
Sure.
long day, but end up closing
Okay,
here.
one
Please
to hold the
mute
price to
yourself,
enter.
Bless. Please mute yourself. So it bounces here, it bounces towards the same bottom and ended up closing above where it opened at. Yes, you call those tweezers bottom, and if you look at it more elaborate, like if you want to start trading structures, this what happens when you start seeing double bottoms, because this happened, like I said, like I told you guys yesterday, you draw your line of support or resistance, you look for where price is bouncing or rejecting. Those are points to consider. So assuming this was your area of resistance, support down here, the first candle, you've been having a lot of momentum selling down here, and finally you have that first reaction, and when this candle ended, this new one open here have the same reaction of that same area or of that same zone, and ended up closing above where it started. So you could have multiple candles, but mostly use the first two candles that happen. And for you to identify this, the tweezer bottoms using a candlestick pattern, the first leg must be red signifying that there's been high pressure in selling. The seller were higher than buyers, so there was high pressure of selling in the market, and this usually is found at the bottom of a trend. So now that this has happened and you have your bounce there and the new one also bounce at the same area, that's where you start signifying that, okay, we have a potential reversal in the market. But mind you, like I said, you will have to put one, two, three, or four, five stuff in consideration, not just use this by itself, but you want to use it by itself, stop below there. It's simple. After you have this candle, it doesn't necessarily need to close at the same area where this close at, but after you have this closing above where it started, you could have multiple candles, but make sure that your invalidation become using the risk reward ratio you're using. But I wouldn't advise trading all this stuff by themselves, but the key potential stuff and tools to use when considering taking your trades, you want to, also apply them as well. Let's talk about our next one. We have the morning star. All right, morning star is a three candlestick pattern. It's represented by three candlestick, and it's a potential reversal. It's a potential bullish reversal candlestick pattern, which is represented by three candlesticks. All right, so morning star is a potential bullish reversal candlestick pattern, which is represented by three candlesticks. So again, you will see these are found at the bottom of a trend, of a downtrend, because like we said, it's a potential bullish reversal. So this represent a potential change in market structure. So this usually happen again after a downtrend, after a thick bearish momentum being shifted to bullish. So this happens, you can identify this by a strong selling candle, by a strong bearish candle, uh, follow up with a small or a doji candle, follow up with a small, like a candle that has little or no body. Doesn't matter the color that it is, but usually if it is red, it's okay. But anyways, you want to say potentially, or the best, it should be like a doji. And yes, you have your thick red candle or a big red candle followed by indecision candle, and then the final last candle is uh very green. So this is the candle that is signifying that there's a shift in market structure, there's a shift in momentum, there's a shift in sentiment from bearish to bullish, because here was your indecision. Remember, we told you guys about indecision candles, meaning that the market is neutral. So after you have this, sell off. Remember, this was from a downtrend, and you have this last sell off, and then you have this one right here, which means there is neutral decision in the market. The market hasn't taken a decision yet. And then you finally have your green candle, which signify a potential shift from structure from bearish to bullish. So yes, these candles are often found. Big legend, please mute yourself. These candles are often found at a downtrend or during consolidation, but the best place to find it is towards the bottom of the downtrend because these are great potential reversal candles. So try to identify them to make a good use of them in a bottom, or you cannot really identify a bottom until it's bottom, right? Until you start seeing some consolidation. Yes. So after a downtrend, you want to make good use of these, you find them towards that small consolidation happening after a big sell-off in the market. So yes, that is how you identify your morning star. And yes, again, like I said, if you want to trade them individually, you wait until price this bullish candle happen, and then you see what happened here next. Ideally, you enter on the next candle, but stop below there. You start get way higher. Remember, you using some key different indicators or other factors. You want to see what price action has been happening around here. So you want to make sure that you get a better risk reward ratio from entering here. Or if you see a small pullback or something, other stuff developing with it, you want to ape with that. But it's a potential reversal candlestick pattern. All right, let's go to the next one, which is the three stars in the south. Remember, all these right here are reversal candles. These are reversal candlestick patterns. So meaning that all of this will happen at the bottom of a downtrend. So the three stars in the south are three candlestick patterns that happen. It's a potential bullish reversal candlestick pattern. Three stars in the south are potential bullish reversal candlestick pattern that happens towards the end of a downtrend. Happens toward the end of a downtrend and signifying a potential shift in structure, signifying a potential shift in momentum, signifying a potential bullish reversal. So how can you identify this one? You identify this candlestick pattern where you drastically seen these candles, you drastically seen these last three candles being changed in the size of the body. You drastically seen them the momentum being reduced. Like you can identify the body of this one is bigger than this one, and this one is bigger than this one. But yes, all of these candlesticks happen. All of these candlesticks, the start of these candlesticks is start within the body of the previous ones. And you can also see that the bodies of the individual candlestick started being reducing, meaning that every time it happens, you see, and it has a potential slide in a bigger wick than the others. If you want to also zoom out, you see that there's a potential hammer here, this for a single candlestick pattern. So you see that this one started with this, I have a small bounce, meaning that there were higher sellers than buyers, but you start seeing this type of reaction that it has a potential longer wick. And another one, small body, and you also see a wick, meaning that the buyers are driving the price. There are sellers than buyers, but the sellers are reducing as time is going on. So this one, there were more seller here. The next one has a reduction, a bigger reductions of sellers, but the sellers were still more than buyers. The other one again has a bigger reductions in sellers, so signifying that okay, there's a potential shift in structure here. Signifying that the next candle is definitely or the next few candles are definitely going to change in color, because look at this. This was big red, medium red, smaller red. So it's just normal psychology to know that, okay, maybe the next one becomes like a doji. It open and close the same way. It open and close at the same place where it open, and maybe the next one become a green, right? So it just, there are structures that you don't really need to use them on their own, but they are very, very crucial to identify them and add them a lot of different stuff, because yes, you find this towards, again, like we say, it's been selling for a long time. So this exhaustion and just a U-turn bend. Also, every one of these has a lower low than the previous candle. Like you see, the low of this was lower than this, and the low of this was lower than this. So yes, you call them three stars in the south because they happen towards the bottom of a downtrend. And again, if you want to trade them after the third candle, you want to try to ape. You want to try to ape what before on the next candle, wherever it's opening out, whether it's coming down here a little bit or up here. You want to bid on that just to close below there. But again, I advise don't trade them singly. You want to use other factors before opening a trade just because of that, but it's a strong reversal pattern. Again, let's finish all of this before we give room for questions. Let's go to our bullish continuations. Let's go to our bullish continuation patterns. Okay, let me actually describe one more before we go to the continuation ones. And because this one is also important, but it's not here, you have uh, the three white soldiers, and three white soldiers happen like at the end of the bottom as well. That just is a three candlestick pattern that happen at the bottom of a downtrend, or during the consolidation after a downtrend, signifying a potential reversal